Hello, everybody, and Happy New Year, and Happy New Year to you, Matt.
To you as well.
Thank you. Certainly, Matt Piepenburg are now back fresh after the holidays, and look forward to what will probably be one of the more exciting years that we have experienced in certainly in recent times, Matt. You know, things and it's more unpredictable than ever. You know, if we just look at the geopolitical situation, of course, Ukraine continues without any solutions whatsoever, no peace efforts in any sense. But you know, Europe is getting more tired of sending money and weapons, and the U.S. is also certainly the House of Representatives and the Senate is, of course, also finding it more difficult to now send bigger sums to Ukraine. I always thought that the Ukraine will always lose, but according to, it depends on which press you read. But nevertheless, that is continuing, Matt, sadly. And then we have the Middle East crisis, which is, well, maybe the most acute part of it is over. But you know, we don't only have Palestine, we also now have the Red Sea and the Houthis, and that's a major problem also. You know, if you think about now that the trade routes is going all around Africa for a lot of freight because of these attacks, and in the Red Sea, and so you have the Red Sea, which is an area of high danger, and then you have the Strait of Hormuz, of course, which where all the oil or a major part of, like 30% of all the oil in the world, could be blocked by the Iranians. So that's another risk area. But you know, sadly, we have this conflict now between Arabs and Islam and the West, and of course they don't have to. The Islam war is global. They don't have to fight it in Palestine or in the Red Sea. They could fight it in the U.S., just, you know, a few dirty bombs in a few shopping centers, or the same in anywhere in Europe. And that's one of the major risks I see for this year, because that's for them the easiest way to attack the West. Not, you know, direct war where they can never win, but terrorism where they can always win by paralyzing the West. So that's one of the very serious areas of danger I see coming this year. Now, you know, then we have elections in many countries. Just, you know, U.S. is not quite ready for it, but certainly Biden isn't ready at all. And I don't think he will be the next president, whatever happens. So, you know, that's an area also of uncertainty. UK looks like a Labour Party, but for example, and that would change a lot also. But you know, anyway, so the geopolitical side, Matt, as we both know, is now getting to a point where unpredictable events can happen at anywhere in the world, and that could be events that could paralyze the world economy and the market. But no one, you know, the stock markets are certainly not looking at that. And looking at the stock markets, you know, it's just this euphoria after the Powell indication of rate cuts coming. You know, my view, I think these rate cuts are very temporary. That we and you know, they might last a few months, or the lower rates that we've seen recently might actually be finished. I believe still that the long-term risks in the world, because, you know, let's face it, US T-bonds are worthless, and treasuries, and inflation is not finished at all. So those two elements will make, you know, in my view, bonds go down and rates go up sometime during 2024, whether it's the beginning or the end. So, you know, that's the background we have. Stock market euphoria, I think, is now coming to an end. I think we could turn any time, and I could see major events on the downside. Whether it starts this month or whether it starts in a few months, I could see stock markets falling very, very viciously in this coming year. It's a bubble. It's a massive bubble, and a bubble of proportions that we haven't seen ever before. So, and therefore, you have risk in market, you have risk in interest rates, you have risk, currencies will continue down, of course, and you have risk in stock markets. So how do you, that's my brief summary, not a pretty one, but we are here to protect ourselves. And of course, we are always looking at gold as the best protection. So how do you see all of this evolving, Matt, in the next few months?
Yeah, I mean, Egon, it's not a pretty picture. People would say it's just bearish or, talking a gold book scenario, but it's reality. And I think the gap between fantasy and fiction isn't just a conspiracy theory or a gold bug argument. It's becoming more and more clear to everyone. This fantasy of a resilient market, as you said, markets aren't resilient. They're Pavlovian. They go up or down based on whether the Fed is hawkish or dovish. So we have a very centralized stock market. Just the carrot of a potential rate cut throughout 2023 made markets chase that promise. And then, as you said, Powell seems to have pivoted towards a lower rate policy, a projected lower rate policy. So markets are giddy on that. So that makes markets resilient. They're not resilient. Again, they're just Pavlovian. This idea that we've defeated inflation is a complete fantasy. Again, not bearish, just a fantasy. More and more people aware. Of course, if you raise rates throughout the year and crush the middle class and create a recession, was not officially reported as a recession, but clearly a recession, that does create disinflationary forces. But the amount of money printing that's coming over the next 10 years, which even the CBO, the Congressional Budget Office, is amounts to another 10 trillion or 20 trillion, excuse me, in 10 years. And that's conservative. That's not even assuming a recession. So of course they're going to print more money. Inflation is going to come back. Rates are going to have to go up to fight that inflation. We are not nearly resilient, and we are not nearly out of inflation. So those are just the obvious fact versus fantasy reality checks that most investors are starting to catch on to. Sadly, they're still chasing that carrot. But in terms of gold, it's fascinating. When you talk about a real resilient asset, just over a year and a half ago, gold is 1,600. It reached all-time highs, despite the traditional headwinds of a quote-unquote stronger dollar, higher yields, and positive real rates. And yet gold defied all those things, reached all-time highs towards the end of the year, because gold is the resilient asset. And more people are losing faith in the U.S. dollar, in the U.S. Treasury, and in U.S. policy. And the evidence of that is not anti-American. It's just cold, hard reality. As you noted, I mean, central banks are dumping U.S. Treasuries at record levels and stacking physical gold at record levels. You just can't ignore the implications of that. That shows a distrust of American monetary policy, and certainly America in general. And I'm an American. I've always said I'm a patriot. It's an unrecognizable country to me in a number of ways. You've got, obviously, whatever people's views are on COVID crisis, the lockdowns, the policies, the CDC and the NIH have lost all credibility. It's no longer a quacky conspiracy theory to know that this virus came from a lab in Wuhan, that the U.S. was probably involved in enhanced training of. So again, that's not a conspiracy theory. You've got that lack of credibility. You've got the Department of Justice attempting to, weaponize its systems to go after a running mate or a presidential runner. Again, you can hate Trump. I'm not here to, pom-pom or champion Trump. But as someone who went to a fairly decent law school, any first-year law student would know that the 14th Amendment, Section 3, you cannot unseat a running president for insurrection unless Congress and the federal courts find you guilty of insurrection. Anyone at the Supreme Court of Colorado or other states that tried to weaponize the 14th Amendment to stop democracy, that they should be disbarred for that. That was a cold black letter law misinterpretation of the law. Again, that's not being pro-Trump. That's just more evidence of a weaponized system. In the U.S., you also had 51 members of the various intelligence agencies claiming that the laptop for Biden was Russian collusion. That's quantifiably untrue. Again, that affects credibility. You've got a media, as you mentioned, depending on which paper you read, how the world looks. Well, if Murdoch owns the Wall Street Journal and Bezos owns the Washington Post, this is not the days of Woodward and Bernstein. So that credibility is dying. And then you have, as you and I have been talking about all year, and ever since the sanctions against Putin and this very avoidable war in the Ukraine, just one catastrophe, foreseeable catastrophe if the next in our foreign policy. I mean, the Ukraine war was a foreseeable disaster. That what happened in Afghanistan was an obvious disaster, and the way we pulled out. Um, Certainly, what's coming in the Middle East, we don't know. No one knows, but the risk of escalation is very high there. So we just have, disaster after disaster. And we have, obviously, even in the U.S., a major border crisis. But most importantly, again, regardless of your partisan politics, I don't care if you're left, right, center, on extremes of either end, it should be quantifiably obvious that we have a leadership vacuum in the United States. It's just obvious. This poor fella, it's basically almost elder abuse now. And I do believe if you watch American media, he doesn't do press conferences, our president, because he simply can't throw 3 sentences together without reading a card or having his advisors. That's an insult to democracy, left, right, or center, that we have a real leadership vacuum. And you have to ask who's making the decisions. So all these things are clear and convincing to me. The fact that Saudi Arabia is now really clearly in the BRICS, and the risk of a slow but steady continued de-dollarization of the petrodollar, all these things, distrust, Pavlovian markets, a broken U.S., are the reasons why gold is continually going up and to the right, having higher highs and lower lows, because the world simply doesn't trust the America of 1944 in Bretton Woods. And so, Egon, these things shouldn't even be debatable, but you've traded, lived, worked through a number of cycles, not just macros, but gold cycles at Matterhorn. I'm wondering, in the backdrop of all the fissures that you mentioned and that I've just kind of mentioned as well, does this seem uniquely compelling to you right now? The backdrops that we're seeing, the markets, the bond markets, the currency markets, the geopolitics. Is this cycle uniquely different than others you've seen in terms of its magnitude?
Well, that's a very interesting question. The gold moves in its own way. It doesn't move when we want it to move. It has these long cycles of moves up, and then they had also some vicious cycles of correction, like in the last 50 years or so, we saw the up move from 35 to 850. And then up to 1900, and then but of course we also saw a move from 850 down for 20 years down to 250 in around 99 2000. That's when we decided that this is the time to go into gold. But just look back again to all the things that you mentioned. So we have this major event risk this year, I think. This geopolitical one, that could be anything, and of course, in relation to the wars that we see. The risk of major terrorism, I think, is massive. The risk of civil war or problems between the immigrants and more right-wing parties coming up, and even Nazi parties, that could be a major problem. And then we of course have the market risks, as we said, stock market, bond market, currency market, the dollar. So these are all risks that will make people look at protection. Stock market has protected them so far. I think there'll be a shock coming this year in that area. But we went into gold around 2000 to 2002, and that of course was when gold was around $300. And that's where we saw real risks. Now we have had a few market drops since then. We've had the obviously the tech move down, and it happened just before that. The Nasdaq moved at around 99 2000, and then we had of course the great financial crisis 69. But since then there's been so much debt created, so much money, and now we have this bubble that so that is clearly something that people are going to realize what they're actually in the wrong markets, and that they will realize during 2024. It'll take some time, but nevertheless, so that's what I see as the major risk. But people also, we're seeing, as you mentioned, we're seeing the BRICS countries and the central banks of the BRICS countries buying gold consistently. But what is interesting is that gold is more or less at the highs now in most currencies. We're seeing a small correction now, but basically we are near the highs. and none of the funds, none of the ETFs are participating. So in the last move of gold of a few $100s, investors are not taking part in this. Yes, of course, there are some small investors buying gold, but the major move is really being run by the central banks of the BRIC countries, which is very interesting. So we haven't seen the real buying coming yet, Matt, nor from investors in the West, nor from funds in the West, nor from institutions in the West. And I think we're going to see that in this year starting in earnest. And, you know, gold is always supported by central banks, Western and Eastern, especially Western, because the Western central banks are the ones who are continuously destroying the value of the currency. And that's why gold measured in paper money always goes up, of course. And this is why it's such a wonderful investment and such a wonderful hedge against all risks in the market, whether it's currency risk, stock market risk, or bond risk. And we know that now, you know, you're talking about now US debt is up, what, to 34 trillion now. And it's, you know, I said when Trump was elected that he would go to, within the next 8 years after he was elected, that he would go to from 20 trillion to 40. Well, we're, you know, that's where 8 years is next is January, a year from now. I wouldn't be surprised to see that. You know, we're going to have some major events in the US, whether it's banking collapses or just major deficits. That is going to, you know, the debt's going to shoot up from 34 to near 40 trillion. I wouldn't be surprised. I wouldn't be, whether we reach there or not, it doesn't matter, but we will be near. And, you know, you can imagine higher interest rates, which I see on top of a 35 to 40 trillion debt. You know, that's the interest just expense of the US government is going to be, well, it's already in the first trillion, and that's going to escalate. So taking all of that into account, Matt, and then looking at gold is now poised for the next move up. We've had a consolidation at very high levels. We've hit this 2000, 2001 level, you know, 3 times. We are now at the 4th time, and the 4th time is going to go through. Whether it goes through in January or February, it doesn't matter. It's going to go through, and then we'll see a very strong move. And again, it's not that the gold is moving up. It's just that it's reflecting what's happening in the world economy and to currencies and to deficits and to increasing debt. And all of that will be, and then investors, fear is going to come into the market, whether that's fear from geopolitical events or fear from bond market events or fear from currencies dropping. That fear is going to mean that people for the first time will see gold as the way that we have always looked at it, which is not an investment, but an asset you must have to protect yourself against the destruction of your wealth. You know, for pure proper wealth preservation. So that's the next phase, which is now starting, Matt, and that will be major. So how do you see yourself, you know, the next phase of this, Matt?
No, I mean, as usual, we're kind of mirror images of our views, and again, it's absolutely ironic and yet so critical to remember when you started this company decades ago on the enterprise and the investment, it wasn't just the very, very important question of why gold, because of the political risk, the banking risk, the bond risk, the market risk, and most importantly, the debt risk from which everything ripples from that simple debt phenomena, that unsustainable debt. Whether you're talking about recessions and depressions, whether you talk about inflation or deflation, market highs, market lows, gold price movements, even geopolitics, or even cryptos. All of these events stem from this central problem of debt. And gold, of course, is an obvious answer why we need to have gold as a part of our wealth preservation thinking. Something, again, you were pressing on decades ago. It's not a smug, I told you so. It was a relatively obvious phenomenon to see when you were buying, and Matterhorn was buying gold at $300. It's not just a look at the appreciation, it's look at the depreciation of fiat currencies. So the why gold question, of which you and I, and you in particular, have spent many years making, I think, frankly, coldly clear, is becoming more and more, hopefully more and more obvious to more and more investors, although they'll always wait and chase these Pavlovian markets first for the opportunity cost. But if you're thinking about generational wealth, you've got to think about things like precious metals. I think the why gold question we've given so much attention to, and we will continue to, because you can't be repeated enough. I think another thing that you were very prescient on that we need to make more obvious in the coming months, and we've talked about this in the past, is not just why gold, but where and how. Obviously, the how is not in a commercial bank and not in paper gold for all the reasons we've discussed in the past, and we'll discuss more. Of course, also jurisdiction matters. In a world that's fractured, what part of the world outside of your own zip code do you store the gold? And these are things that, in the coming months, as we work and as we travel and as we speak to viewers and as we write our articles, these things have to become more and more obvious to sophisticated investors, because you need to have direct ownership. You need to have segregated, allocated accounts. It needs to be outside of banks that are completely dysfunctional. It needs to be in safe jurisdictions, despite a world that is not safe anywhere. In some ways, you can find pros and cons. And just to kind of foreshadow for others, in the next couple of weeks, we will be releasing our new website, which takes a very strong look at these other questions beyond just why gold, looking at different jurisdictions, looking at the risks, the objective, not scary gloom and doom, the objective risks of holding gold in a commercial bank or in an ETF, and the objective risks of which jurisdictions you choose. Despite no one being the best, there are certainly relatively better jurisdictions. We're going to have a very dedicated, user-friendly, simple analysis of these things, objective, not just pushing our bias for Switzerland, but it's a very strong case for places that we've selected. So I think the important issue of why gold, we'll never stop talking about that. And we won't just smugly say, I told you so, but it's also important to understand where and how to own it, where to own it, and how not to own it. And, I think we've done a great effort this year to create a new site, a new website that's going to be coming out soon, and a new kind of dedicated page with a lot of subcategories to answer these questions for people that are still on the fence or scratching their head. And I think that's very important. So I just wanted to remind that it's more than just why, it's how and where. And those are my thoughts, Egon. I don't know what your closing thoughts are as we head into a very tumultuous 2024 already, a big election year, a big year with all kinds of risks from that ripple effect of debt. But that's where I'm looking right now.
Yeah. No, totally, Matt. I totally agree with you. And there are times when gold is wealth preservation, and there is time when the gold is wealth enhancement, and there are times when it's both. And but what people don't realize, we started with gold. Okay, we started in a major way in around between 2000 2002 at $300, and since then, gold is up 7-8 times in virtually all major currencies, and a lot more in the weak currencies. So, you're looking at already in the last 20 years or so, a major wealth enhancement, and a move that is bigger than in most other asset markets, including stocks. But as I see it, that is just the beginning. And I think right now we are going to see the need for gold as wealth protection being greater than ever. Investors have not realized that yet, Matt. But they will during this year, and it'll take them time. But people will enter the gold market, and I just wish that they take advantage of the opportunity now, which is still around the 2000 level, because gold is over time going to go a lot higher than that. And I see in the next few years, gold as not, as I said, wealth protection, but also the best instrument for wealth enhancement. So you have the most fantastic protection in physical gold stored in, the most fantastic vaults. If you take our example, we have one vault in the Swiss Alps, that's for bigger investors, but still is the safest vault in the world, in the mountain. And so people should think about now seriously holding gold as wealth protection. And also, as I said, which is so important to remember, because most people want to make money But that's not why you hold gold, not at all. You hold it to protect against losing a lot of money, which most people will do in the next few years in virtually all asset markets. But as I said, on top of that, this is going to be a period when gold will be used both as wealth enhancement and wealth protection. So it's the most wonderful asset to hold right now, and people should clearly take heed of this and buy gold not when it's 2,500 or 3,000, whatever levels, what the next levels are. You should think about buying it now, because, as I said, your other assets are going to start falling rapidly in the next few months and in the next few years. So you know, I think 2024 will be an interesting market if you're prepared for major events. That will be negative, most of them, but if you're protected, at least you know that you're going to lose less money than most people. Yeah. And as always, as I always say, Matt, you know, we would have some tough times there, some very tough times. At the end of the day, we can't change the direction of the world and geopolitical situation, but we can look after our family and our friends, and I think that's will be a very important part of our lives in the coming years. So people should think about that. So it's maybe not the best and the most optimistic message for 2024, but we're not here to spread false optimism. We're here to try to help people to navigate through these very difficult times that we see starting this year. So with that, Matt, we wish everyone a good start to the year, and we will be back soon.
Sounds good, Egon.
Thank you very much, everyone. Thank you. Bye-bye.